95% of people who attempt trading reach the same silent conclusion at some point. This isn't just hard. This is impossible. They don't all quit immediately. Some blow their first account and try again. Others hang on for years, constantly switching strategies, brokers, markets, and timeframes. Many develop elaborate explanations for why they can't win. The market is manipulated. Institutions have unfair advantages. Algorithms are hunting stops. The system is designed for retail traders to fail. And then there's the other 5%. They trade the same markets. They see the same charts. They have access to the same data. They wake up to the same 24 hours in a day. Yet to them, trading doesn't feel dramatic or chaotic. It doesn't feel like a constant psychological battle. In fact, many of them describe it as boring, mechanical, almost obvious. That contrast alone should bother you. Because if the environment is the same, then the difference can't be the market. So what is it? It's not intelligence. Some of the most intelligent people you will ever meet fail at trading repeatedly. People with advanced degrees, high IQs, and proven success in other fields often struggle more than average. It's not starting capital. Whether someone begins with a small account or a large one, the percentage of traders who fail barely changes. And it's not information. We live in an age of unlimited data. Charts, indicators, news, analysis, opinions, it's all available instantly to everyone. So if it's not intelligence, money, or access, what separates those who fail from those who quietly succeed? Here's the uncomfortable truth. The 95% are trying to conquer the market. The 5% are trying to execute a process. And those are two completely different games. By the time you finish this, you won't just understand why trading has felt so overwhelming. You'll understand why your effort may actually be working against you, and what has to change for trading to stop feeling impossible and start feeling manageable. Let's begin with two traders. Ethan was a systems analyst, sharp, methodical, and highly disciplined in his career. He had spent years solving complex problems, breaking systems down into components, optimizing performance, and eliminating inefficiencies. When he discovered trading, he approached it the same way. He believed the edge had to come from deeper analysis, more precision, more confirmation. His charts quickly filled up with indicators, multiple moving averages, momentum oscillators, volatility bands, market profile, correlation dashboards, volume analytics, order flow tools. He didn't see clutter, he saw sophistication. Every morning, Ethan spent hours preparing. He read economic reports, scanned financial news, reviewed overnight market action, analyzed higher timeframes, and checked sentiment across multiple platforms. He believed that if he could just see the market clearly enough, uncertainty would disappear. 18 months later, he had blown through several accounts totaling over $60,000. Not because he was reckless. Not because he lacked discipline. Not because he didn't understand markets. He failed because he tried to eliminate uncertainty in an environment that is built on it. Now consider Lena. Lena didn't come from finance. She had worked for years in a gaming environment, watching people make decisions under pressure. She saw patterns most people ignored. She noticed that the people who lasted weren't the ones who chased big wins. They were the ones who accepted small losses and stuck to rules. When Lena began trading, she carried one core belief with her. You don't need to predict outcomes to make money. You need a repeatable edge and the discipline to execute it consistently. Her entire trading plan fit on a single page. She only traded during specific market conditions. She risked a fixed percentage on every trade. She entered, managed, and exited exactly as planned. No adjustments, no improvisation. No news consumption, no social media opinions, no constant tweaking. After 18 months, her account had grown steadily. Nothing explosive, nothing dramatic, just consistent progress. The difference between Ethan and Lena wasn't talent. It was approach. And this difference explains why trading feels so unnatural to most people. Trading breaks the rules of how success works everywhere else in life. In school, more studying usually produces better results. In work, more effort typically leads to more output. In business, optimization and expansion are rewarded. Trading flips this logic upside down. More analysis often leads to worse decisions. More trades often lead to lower returns. More information often leads to paralysis. This creates internal conflict. Your brain wants to work harder. The market rewards restraint. Let's break down the 5 forces that make trading feel impossible. First, uncertainty. Every traditional job has structure, defined tasks, predictable outcomes, clear expectations. Trading has none of that. You choose when to trade, how to trade, and whether to trade at all. Every decision carries uncertainty. Your brain hates this, so it tries to impose certainty. It looks for patterns that promise prediction. It searches for indicators that feel authoritative. It believes that if you can just analyze enough variables, the future will reveal itself. But markets don't offer certainty. They offer probability. The 5% accept this early. They don't ask, what will happen next? They ask, does this setup give me a statistical edge? Ethan needed to know. Lena only needed to execute. Second, instant feedback. Most careers provide delayed feedback. You work on something for weeks or months before results appear. That delay protects your emotions. Trading removes that buffer completely. You enter a trade. Price moves against you. Money is at risk. Your nervous system reacts instantly. The same mechanisms designed to protect you from physical danger activate. That's when rational thinking collapses. Stops get moved. Trades get closed early. Rules get adjusted in the moment. Every action feels justified, but it's emotional decision-making in disguise. The 95% experience this constantly. The 5% create emotional distance. They understand that individual trades are noise. They view results in aggregates, not moments. Third, the addiction to complexity. Complexity feels like progress. Learning something new gives your brain dopamine. Adding tools feels productive. Research feels responsible. But trading doesn't reward knowledge accumulation. It rewards execution. Ethan added complexity every time he struggled. Each loss convinced him he was missing something. Lena removed complexity every time execution felt unclear. Her question was simple. Does this help me act decisively? Simplicity wasn't a limitation. It was a filter. Fourth, obsession with outcomes. Most traders evaluate themselves based on profit and loss. Green days feel validating. Red days feel personal. But outcomes are largely uncontrollable in the short term. The only thing you control is behavior. The 5% redefine success. A good day isn't a profitable day, it's a disciplined one. Same loss, same trade, completely different psychological effect. Ethan's confidence rose and fell with his account balance. Lena's confidence came from consistency. Over time, consistency compounds. Fifth, information overload. At a certain point, more information stops improving decisions and starts degrading them. Conflicting opinions create hesitation. Hesitation creates mistakes. The 5% deliberately limit inputs. They focus on what matters to their system and ignore everything else. This isn't ignorance, it's discipline. Now comes the shift. The traders who succeed don't eliminate these forces. They stop resisting them. They stop trying to predict and start reacting. They stop measuring success by money and start measuring execution. They simplify until decisions become automatic. They restrict information until clarity returns. They embrace patience as a strategic advantage. Most of their time is spent waiting. This is where many fail. Waiting feels unproductive. It feels like wasted time. But in trading, restraint preserves capital and mental energy. Consider Marcus. Marcus used to take dozens of trades a day. Constant action, constant stress. His results hovered around break-even. He imposed a rule, a maximum of 3 trades per day. No setup, no trade. His win rate increased. His average winners grew. His stress dropped. Same strategy, same market, different behavior. This is what the 5% understand. Trading isn't about being busy. It's about being selective. The final shift is identity. The 5% don't identify as profit hunters. They identify as process executors. Losses don't break them. Wins don't inflate them. Their sense of success comes from discipline, not outcome. And this is why trading becomes boring. Routine replaces excitement. Process replaces prediction. Consistency replaces chaos. When trading stops feeling dramatic, it starts working. Trading is only impossible when you demand certainty from uncertainty, excitement from patience, and complexity from simplicity. When you stop fighting the nature of the market, the struggle fades. You're left with a choice. Follow the path of the 95%. Add more. Force more. Consume more. Fight harder. Or follow the path of the 5%. Simplify. Execute. Wait. Repeat. The market doesn't care which path you choose, but only one of them keeps you in the game long enough for probability to work in your favor.